Sunil Singhania now joins us. Sunil Singhania is the face of Reliance Mutual Fund, but today I want to introduce Sunil in a different capacity. It is Sunil Singhania, CFA and President of Indian Association of Investment Professionals. Sunil, the CFA Institute completes 50 years in India. I'm sure it's a big moment for you.
Yeah, I think they've completed 50 years globally, and the good thing is that today it's a historic day. We are celebrating it by the bell ringing ceremony across 26 exchanges, of which Bombay Stock Exchange is one. So yes, it's a good designation. It focuses a lot on ethics and development of financial markets, and it's a privilege to head such a prestigious organization.
Let's talk markets, Sunil, shall we? What's your market view?
Yes, things are challenging. There is no doubt about it. But I think, sometimes, as has been proven in the past, the markets tend to discount almost everything negative which is there in the present as well as probably in the foreseeable future. So I think we are in that kind of a situation where the market is discounting a lot of negatives. What can turn positive? Yes, there are some things which can turn positives. But the good thing is that the market is not willing to give any sort of positive indications for those positives. And I think that is exactly the reason when even a small positive comes, the market bounces back with a vengeance. So our call would be, there are challenges, there is no doubt, but the risk on the upside right now far outweighs the risk on the downside. And being an optimist and being very positive on India from a longer term perspective, our call would be to try and look out for those positives rather than try and analyze the negatives.
Sunil, hi, morning. Congratulations on celebrating the Golden Jubilee first. And secondly, what about the global scenario? You think the election of the Greece election outcome could have significant ramification for global markets?
See, as I said earlier, we are micro-analyzing a lot of things. Now, what is going to happen to Greece is anyone's guess. And frankly, sitting in India, we don't know what is going to happen to Indian politics, leave alone Greece. But having said that, I think probably even as far as Greece is concerned, 80–90% of all the negatives are priced in. Now, unless there is a dramatic, collapse of the country, our view would be that the markets are not going to fall or react too negatively to it. Obviously, if something were to happen in terms of Greece exiting euro, which is again a very small probability, there might be a knee-jerk reaction. But because it's been lingering on for so long, as I said, market has slowly but surely discounted a lot of things. And from our perspective, as I said, we are not experts on Greece or Eurozone, and we take news flow as it comes. Right now, the news flow is indicating that the Eurozone and specifically the larger countries are trying to do their best to ensure that it's a smooth kind of a transition and austerity measures take place.
Sunil, but for any markets to appreciate in the near term, you need liquidity. Currently, global liquidity is challenging. Retail investors are just not there. And if I look at most of the HNIs are either investing in real estate or they are buying gold. So what will drive this market? Where will the money come from?
I don't agree that there is no liquidity in the global markets. In fact, there is extra liquidity in the global markets. Otherwise, you cannot, sort of justify the almost 0% interest rates in major countries, whether it's the US, whether it's Euro and Japan. I think across most of the stable countries have yields on bonds falling to the lowest ever level in the recent past. And then that clearly indicates that there is enough liquidity. Even if you see the FI flows in India, despite all these concerns, year to date we have nearly $10 billion coming to the country. So the question or the apprehension that there is no liquidity in the global markets, I think is not justified. There is enough liquidity. As far as India is concerned, yes, in the recent past, money has flown into real estate and gold. Because by way of our behavioral instincts, we always tend to focus on the immediate past. But my advice, and it has been justified and it has been proven in so many other countries and so many other past, even in India, is that in times of uncertainties, the investments made are always the best investments made in the equity markets. So at this point of time, valuations are in our favor. Markets is not expecting any positives. So I think if something positive happens, then you might not be able to buy at the same valuations. But just to put a disclaimer, there are challenges. But I think investment is all about risk and return. And at this point of time, the risk return is clearly in favor of investing.
So Sunil, what pockets does one, look into right now at the current level of 4,900?
See, again, instead of pointing out a sector, I think there are opportunities across. There are opportunities, in the mid-tier companies. People have been ignoring it. There are opportunities in some of the larger companies because, the sector might be out of focus. There might be some regulatory risk. So I think there are opportunities across. What we need, obviously, is clarity in terms of our time horizon of investing. And I think if that is there, then there are umpteen opportunities, and we would be more diversified at this point of time. But at the same time, just to give a few sectors like pharma, banking, we continue to be overweight. We are looking very closely at the capital goods segment, though there are near-term headwinds, but the valuations are probably at the lowest in the last 4-5 years. So I think across the sectors, we are just trying to see what in the current environment can do best.
Sunil, my compliments on pharma, because if I look at your portfolio, what has worked for you as a charm is pharma, and you've again and again indicated to our viewers that at Reliance Mutual Fund you were bullish on pharma and you are bullish on pharma. What is working for Indian pharma companies? Currency, environment, or the fact that they have a strong business model?
See, when you look at pharma companies, you have two models. One is the domestic market and then the other is the global markets. I think in terms of domestic market, month after month, we are seeing data come in where the domestic pharma industry is growing at upwards of 15-18%. So I think that itself has become a big opportunity, and it is growing it faster than any of the FMCG companies. The second opportunity obviously is a huge global opportunity. There is a move toward genericization in almost all the countries, whether it's US or Europe or Japan, where governments want to reduce their healthcare cost. I think that again is a big opportunity for pharma. And obviously the currency has helped because pharma in general is a net exporter. So I think a combination of good companies, great domestic opportunity and a large global opportunity helped by depreciation in rupee. I think they've all contributed towards ensuring that the profit growth in pharma sector has been much better than expected.
Sunil, what's given you conviction in the entire banking pack? Is it only valuations because they've been so beaten down? Because the general consensus on the street is that asset quality risks continue to remain an overhang on the entire sector.
See, one is the banking as a sector is hugely underpenetrated. I think almost probably more than 50-60% of India's population don't have a bank account, even more. So there is a huge opportunity. We as Indians are under leveraged on our personal balance sheet. So there is huge opportunity again on mortgages, on auto loans, on personal loans and so on. And there is definitely a risk of asset quality. But almost all the major banks have provided or restructured a lot or a majority of their stressed assets. So unless the economic situation were to deteriorate further from here, we think that in the next 6-8 months, probably some of these restructured loans might start to turn positive. And I think ultimately our view is that interest rates have to come down. And I think if that comes down, then almost logically, the banking sector also should perform, because some of these stressed assets will start to become will turn positive the moment the interest rates is reduced to some extent. So I think it's a combination of a lot of factors. And yes, as you said, stocks have come down to good levels. On a lot of PSU banks, we're getting dividend yields of more than 5-7%. So if you invest now over the next 13 months, you get 2 dividends, one for March 12 and one for March 13. So that itself is a very attractive proposition.
Sunil, a quarter ago when I interacted with you on this same forum, you were cautiously bullish. Can I take that word cautiously out, and can I simply summarize that right now Sunil is bullish?
See, frankly, as Reliance Mutual Fund and as an individual, I think we are very, very optimistic and positive on the Indian economy. And I think as long as you're optimistic and positive on the Indian economy, there is no harm in being positive on the Indian markets. Just to give you numbers, we are at $1.2-1.3 trillion economy. We can definitely be $5 trillion in the next 10-12 years. And I think that itself is a huge thing. When we see ourselves, I think we are much better off than what we were 5 years back, 10 years back. And I think that is true for all Indians. So there has been general prosperity, and this is going to continue. The growth rates might slow down in 1 or 2 years to 6%, 6.5%. In some years it might again bounce back to 8.5%. And with a little bit of push from reforms and from some government policies, this can be, preponed rather than postponed. So I think we remain optimist, and whether it is cautiously bullish or bullish, I think the right word would be there. We are optimist, and we think that equities as an asset class definitely has a lot of potential in India.
Sunil, if there is a diesel price hike, as is the consensus on the street, come next month, do you think that is going to significantly and meaningfully improve the sentiment?
See, one thing is, as I mentioned earlier, any factor which is already expected in the market, the outcome of that factor has almost no impact on the markets. So I think what you said is expected by a lot of people. The other thing is, in equity markets, the lesser number of ifs you have, the better it is. So, without speculating whether this is going to happen or that is going to happen, I think what we have to live with is the probability of an event happening, and whether that event probability is already discounted in the market. So I think as things stand, we are discounting to some extent a reasonable price hike. Whether the price hike is high or low, that time will tell, but a reasonable price hike is already discounted in the market.
Sunil, final question, 30 seconds before we wrap. In 30 seconds, if you have to make a sales pitch for Reliance Mutual Fund, how are you planning to differentiate this year?
See, I think as Reliance Mutual Fund, we stay committed towards giving consistent risk-adjusted returns, and over the last 15 years, we have been successful in doing that. We boast of a very stable team, a very experienced team. We are very committed, we are very passionate, and I think passion is something which is definitely needed for equity investment. So I think our investors, keep on having some concerns, but they have seen us over the last 10-15 years. So I think we are very committed, and we definitely hope to add wealth and value to our investors.
Sunil, this is part of your prospectus. My question was that how are you planning to differentiate in terms of a portfolio strategy?
See, portfolio strategy is a combination of already what I have told you. As I mentioned, things are challenging, and it is good because when things are challenging, sometimes you end up getting stocks at valuation which you would never have dreamt of. And I think specifically in the second-tier stocks, you are getting those kind of opportunities. So, you have to take a little bit of near-term risks, but if the risks are well thought of, well researched, then our experience has been that, you can definitely create that alpha and differentiating portfolio. It happened in 2003, it happened in 2009, and we don't see that happening again probably in the next few months.